For today, we'll continue our journey through cost accounting. Our next chapter is chapter 10. I do want to mention that the last exam, everyone did very well. I was well pleased with the results. It's one of our tougher chapters, so I know there was a lot of work and effort in the assignments and so forth, so I was glad to see that effort paid off, and to see the good results on the exam was awesome. So give yourself a pat on the back, because again, it's one of our tougher chapters. So chapter 10, I think, is you have a template that we will use for chapter 10's computations. They're all the same template. So here's another opportunity to put this in an Excel worksheet and have it as a tool for you to compute the variances. If you're really into Excel, which I hope some of you are, you can also have a if-then to determine whether it's favorable or unfavorable. So there are some opportunities, again, to work on your Excel skills with this chapter. One more item I want to mention. On future tests, I would like them done here, unless it's an extenuating circumstance like weather or some other issue. I just feel more comfortable if everybody is here and doing the exam here. So going forward, we only have 2 left. Let's make that our direction. And due dates for chapter 10. We have one today. I usually do. For the concept clips. So that's due today, so don't forget that. It's 5 points. It doesn't take long to get those 5 points. And then the rest is due a week from today, the 17th. So we are going to go through chapter 10 rather quickly here. And our exam then will be the following Monday, a week from Monday. Today is Wednesday, right? Yes. A week from Monday will be the exam. Any questions? All right. Let's take a look at what we have in store for today. The chapter 10 material that we'll cover in this next exam is from pages 521 to 542 and Appendix 10A, and that goes from 552 to 554. Whoops. So that's what we're looking at. The rest of chapter 10 will be put on the next exam, the last exam for this class, toward the end of the semester. So that's what we're looking at as far as scope for this particular chapter for now. And obviously your assignments will be geared toward those pages as well. What's different with chapter 10 is we're going to embark on another costing method. Man, it looks like we've been doing constantly different ones every time. But this one's called standard costing. And here again, this type of costing method can be used for many different types of companies, big or small, it doesn't matter. And what we're trying to do is set standards. And you can see what that means here. Or it's a budget, right? And so much of what cost accounting revolves around is setting those budgets so that we can compare to what actually happened, right? And that's where the control function comes in. So we're going to look at 2 standards. One for the quantity, and since we're dealing with materials, direct materials, the quantity could be pounds, it could be ounces, it could be gallons, and so forth. Or if we're looking at direct labor, actually the hours, right? How long does it take to do a section of our production? What is that standard for that operation. Secondly, our other standard we're going to be dealing with on the material side is purchase price, right? And on the labor side, we are going to look at hourly rates. For, again, two of our product costs, we have material and we have labor. So that's all we're going to concentrate on in this particular chapter. So, they go through another definition barrage with any new chapter. The goal here is to set up a cost per unit, a standard cost per unit. So, like any chapter we did in cost, it was always a cost per unit. That's our goal. How much is it? And since it's a standard, like we talked, we want to compare this to actual cost per unit. And that's how we learn, right? That's how we know if we're off track, off step, and we need to change something. Now, as cost accountants, how do we get the standards? That's a big question. Where do we get the standards from? So on page 523, in most cases, historically, we look at past performance, right? We look at how we did last year, 2 years ago, 5 years ago, that historical perspective. But we also have needs, maybe it's a new operation, right? A new way of doing things. Well, then we need maybe some help, some outside help. And there are industrial engineers that will come into a facility and actually do timings. They'll actually watch your operation, try to find out where those inefficiencies can be found and where we can save time or save in quantity, right? I worked in a steel plant, job shop, and we used to have material where we could cut half-inch between the parts. Well, the technology improved, but now it's about we're talking thousandths of an inch instead of a half-inch. So those kind of things need to be adjusted and looked at countlessly to improve our operations. So, and always, as always, we're nice, right? What should we do whenever we're trying to determine whether a standard's a good one or not? We need input, right? It's hard to, from top down, dictate how quick somebody should do something. We need their input and their buy-in. Otherwise, to make changes would be almost impossible. So you have to be tactful, you have to be a people person. So here again are those soft skills that many employers are looking for, right? From you guys as personnel, cost personnel. And they talk about two types of standards, and I do need to have you know these definitions. Again, for those multiple choice. And I must say, if you did lose points, it was on terminology or words. It wasn't actually on the problems themselves. So I don't know how to improve that other than hopefully we can read the chapter and learn from that. But two types of standards are ideal, which means perfect. In other words, no inefficiencies, no downtime, nobody calls in sick, nobody's late, nobody's taking a lunch break, right? So those are perfect, ideal situations. Well, that's not possible to hit those standards. You don't want to set a standard that's way too high and nobody even tries to attain to it, right? Or get to it. So as cost accountants, we have to make these standards attainable, can reach, right? Can reach the standards that are set. That's what we're looking for. And there's a cute little graph. Isn't this cute? Right? Here we are. Here's the world record over here. Well, let's shoot for something in the middle, right? Continuous improvement, right? That lean operation is what we're looking for. All right. So, I think we've talked about variances, right? Here's that variance word coming back in. We got to look at two standard variances, one called price and the other called usage. And you'll see those variance words on your templates that I handed out. So you'll have a material template, and then you underneath it have a labor template. And then we'll set or compute. Our job in Chapter 10 is to compute these 4 different types of variances. There's 2 for material, and then 2 for labor. And I think this will be so much easier than what you just went through as far as dealing with FIFO and weighted average. So why are we doing this? The big reason is for control, right? We want that ability to control our operation on a day-to-day basis. And standard costs gives us that control. All right. So, when we set standards for personnel in our production, right? We're going to use that standard to evaluate performance. Okay, here's again where we have to be very careful how you set that standard. Again, we don't want to make it too high, we don't want to make it too low. We want to make it challenging. So you can't set a standard that no one will ever reach. You'll have a mutiny on your hands. So that's what they're talking about here. You have to be cognitive. You have to be aware. Don't use that word, cognitive. I can't say it. You have to be aware of those standards. All right. So, like I talked about, we started here in Chapter 2. We went to Chapter 4 with normal costing. This was job costing. And we are currently here in Chapter 10 where we are going to use standard. Now, this too I would like you to know, with standard costing, what's going into WIP? Budget numbers, right? Mm-hmm. So can I give an income statement at the end of the year with budget numbers in it? No. No. So how did we solve that problem when we were over here in job costing? Reconciliation. And we're going to have those closing entries again here to close the variance accounts. So we're going to have a price variance. We're going to have a quantity variance. We're going to have an efficiency variance. These variances are temporary accounts. You will never see a variance account name on an income statement. That would be, again, not plausible, right? So those closing entries will be done, and that's really what the appendix is about. Appendix 10A shows those closing entries, and we'll get to those once we get through some problems here. So on pages 525, I'm just going to have you read this on your own. It just shows again what are the advantages. I like this one. This one's cute. The last one.
Yes.
You just went through that process costing. Well, again, this should be much easier than process costing. I just think that's funny that it's an advantage. So, on page 526 is a standard cost sheet. Basically, you could replace the word standard with budget, and it'd mean the same thing. So our budget for this particular example is we're making a bag, corn chip bag. A bag of corn chips is what we're making. Oops. And it breaks it down rather in detail. What materials make that corn chip bag, including the bag itself, and then what labor is needed to create that bag. Not only a price standard, but a quantity standard are set for each particular item on that standard cost sheet. And in this case, we budget 88 cents to make one bag of corn. Okay. Now, this again is or can be used to help us what? Set our selling price for that bag of corn. So this is also used for that purpose. Again, this could be pages long, right, for certain particular products. Can you imagine building a Boeing, what is it, 747 now?
Yeah.
Can you imagine what that cost sheet looks like? They do use standard costing, for sure. For their, well, they use job costing specifically, but I'm sure there are standards set for times within that operation. All right. So, Chapter 10 has a lot of abbreviations. SQ and SH are one of them. And they basically mean the standard quantities allowed. What should I have used, right? The standard quantities allowed. So if we look at example 1 here, we have 18 ounces is the standard. And I'm multiplying that 18 ounces by actual output. Now actual output is what we made. So doesn't it seem logical? If I made 100,000 corn chip bags and the standard was 18 ounces of corn to make one, I should have used, right? The budget used 1.8 million. So that's what SQ means, standard quantity allowed. And they also do that for labor, standard hours allowed. That's what SH means. And then we get to AP, AQ, means actual price, actual quantity. So what did I actually pay? What was the dollars? What did I actually use? And then we're going to compare the two, basically. And these are all done on our templates that we have to use. AP, AQ. And we can just, this is the SP, SQ again, so we've already talked about that. Total budget variance. is the difference between actual and planned cost. If you notice on your templates, I bring the two price and quantity together into one total in the middle. So that's what we're looking for, a total budget variance. So on your exams or exercises, sometimes they'll ask for a price variance or a quantity variance or what is the total variance. Okay? And our templates, again, will help us determine that. So let's try a problem before Tom leaves and others. So let's fill out an actual form.
We'll probably come back.
Oh, that's fine.
Yeah, I really love it.
Let's try problem 45. It's on page 569, 570. You can take any one of the templates, they're all the same. So here we have a manufacturer, they're making leather belts. The company's plant is in Boise, Idaho, uses a standard cost system, and has to set the following standards for materials and labor. Now, there is a $12, where can I put that? Per unit. And there is a $9 per unit for labor. So this is direct material, this is direct labor. This is on the standard cost card. How much does it cost in 1 unit? I don't want you to use any of those in the template. So they're there just to tell you what the standard cost is per unit. That's all that purpose is. What you do need to focus in on are the numbers on the left of those 12 and 9. The 3 and the $4, the 0.75 and 12. So how many strips does it take to make one belt? 3, right? How long does it take to make one belt? 3/4 of an hour. And we set a standard of $4 for each strip. And we have set the standard that our labor is normally paid at $12 an hour. So those are the standard rates. After that, we get our actual numbers. So during the month, the Boise plant produced 92,000 belts. Actual leather purchased was 287,500 pieces at $360 per strip, and there was no beginning or ending inventory levels. Actual labor was 78,200 hours, and we paid them $12.50 an hour on average. All right, let's start with the material first. I'm going from left to right. What was my actual price paid per strip? $360, correct? And how much did I actually purchase? How many strips?
287,500.
Yes. Perfect. That's it. We multiply the two numbers together, and I get how much? And you, Diane? So this is what I paid to my vendors, right? my vendors charged me $3.60 for each strip. So what is my journal entry? We're accountants, we gotta know our journal entries. What's our journal entry for the 1,035,000? I debit what? Merchandise inventory or raw material. Merchandise means what? It's resale. It's like a Walmart. So we're in production mode. So raw material or materials inventory would be debited. What's credited if they're all on account? Accounts payable. If I paid cash, it would be cash would be the credit. So that's the journal entry for 1,035,000. All right. Now, for the strip, again, we're dealing with material. What was the standard? What did we think we were going to pay?
$4.
$4. Very good, Michelle. And now, these are color coded. They are the same numbers, right? Purchase, purchase. So I'm going to put the same number, 287,500. And also my SP number, my standard price, $4, is also reused 2 more times, so we can put that in. Now I do have to recognize a copyright issue here. I stole this template from Janet Dawson. I didn't steal it. I harvested it off from Janet Dawson. She made this template. It's got nice colors to it. That makes sense so far? We're going to multiply the 4 times the 287.5.
The part that doesn't make sense to me is the $4. Isn't that like 3 strips for $4 though? Instead of 1 strip?
3 strips.
At $4 a piece.
Oh, at $4 each. Okay.
Yep. And the 3 times the 4 then, Tom, is the 12
Oh,
per
okay.
unit.
That makes sense. Huh? Thank
Okay.
you.
Do I have a amount, somebody?
1,150,000.
And we can take the difference, right? Which is 115.
Go ahead.
You've just computed your first variance. How cool is that? Awesome. Now which direction though, guys? Is it favorable or is it unfavorable?
Favorable.
Why do you think it's favorable?
Because we
budgeted for 1.5.
we budgeted for a higher amount.
Yeah, we did. We budgeted for 4. What did we get it for? 360. So this is a favorable price variance. Now, wouldn't it be cool if you could put an if statement from Excel, right? If you could test it. If this cell is less than this cell, put favorable in. The false would be unfavorable. Wouldn't that be cool? That would be cool.
That'd be awesome.
That would be actually awesome. So I really, really would encourage you to do this. Please. It'll make your assignments, your tests that much quicker, and we won't have math errors. Because if you're punching in 360 and then this number and then this number and this number, that's 4 opportunities to make a mistake. Whereas if I could just hand enter these, it'll compute the numbers automatically, right? Compute the variance automatically. Not only the amount, but the direction. Okay, we're good? Now, we're down to our gray number, account, actual quantity AQ used. So, in this case, what did it say about inventories?
There wasn't any.
There wasn't any beginning, there wasn't any ending, so guess what? I must have used everything I purchased, right? So on different problems, guys, you will have inventories to deal with. So you will have to compute quantity used. How do I do that?
The beginning balance plus the purchases minus ending.
Yes. We've done that countless times. Quantity used. Yep, take the beginning, you add the purchases minus the ending gives you the quantity used. In fact, your project problem, the 25.1, which is a TSA one, has inventories to deal with. So you will have to do this for your project. Okay. Well, that's the same number, right? 1,150,000. That's box 3. Same numbers. Now we get to the last one. The SQ. This is the quantity allowed. Quantity allowed number. So in order to get the quantity allowed, we have to find out what was the actual output. What did we actually make in this month? How many belts?
92,000.
92,000. So you will be told somewhere in the problem what the actual output. It could be belts, it could be gallons, it could be shoes, it could be shirts, it could be whatever. Belts. And I'm going to multiply that by the allowed quantity per unit. How many strips were per unit? What's the standard?
So is that the 3 strips?
That's the 3 strips. Again, this test will be, the computations are not hard. It's finding what number to go where, right? So that'll be the tough part. So 92,000 times 3 is 186,000, right? Did I do my math right?
276.
How about 276? And that's our SQ number, 276. Times 4 is
1,104,000.
a difference of 46,000. So now I'm looking at, it's called material usage variance. So what is it? Is it favorable or unfavorable in usage? Did I use more than I thought, or did I use less?
We used more.
I used more, right? So that means what?
Unfavorable.
Unfavorable. Excellent. So what boxes am I looking at? I'm looking at the used box, right? And I'm comparing it to what I should have used. So the gray number and the purple number, they're different numbers, right? That's what I'm comparing. Just like before, we were looking at the price and the price, comparing the prices to see whether it's favorable or unfavorable. That's what I would like you to do on these templates. on the test, if I ask for a quantity or usage variance, there will be two answers, 46,000 unfavorable, 46,000 favorable. Right? Guaranteed. Guaranteed for every question. So you've got to be sure that you have the direction in the right direction, right? So some students, again, on this test, they think they've done it very well, and they hit the submit button, and the problem revolves usually around this favorable, unfavorable thing. They had the right number, just the wrong direction. So here again, if test, right? If this number is less than this number, it's favorable. Otherwise, if it's greater, it's unfavorable, right? Very easy to set up. And if you're not getting it, let me know. Ask a friend. Who's your cost buddy? Ask your cost buddy, right? I'm sure that you can figure out something. Now, we come up to a total, right? Total variance. I have a favorable direction and an unfavorable. What can I do? Net the two, right? The favorable is larger. I'm not going to tackle that. How is it?
69,000.
69 is the net. And we're done with material. That's it. I need you. What do you think, guys? It's got to be better than FIFO weighted average, right?
I mean, it seems pretty simple.
It's not as
That seems-
confusing.
Yes. I mean, it's much more direct, is it not?
Yes.
Good. Let's make our journal entries quick for just the materials. And before I do that, go to page 553 if you have your book. Page 553. We're going to record the material price variance. And they actually use SP, AQ, blah, 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 and they put the numbers below it. And then after that is the material usage variance entry. So those are the two entries we're going to make right now for this particular problem. I'm going to move this to the side. Do you guys have any paper to put this on? Usually I give you everything. You can put it somewhere on the side maybe, if you have room. It's just 3 account names that we're going to be dealing with for each problem. So do your best with it. I gotta see what the author's using. They just use the word materials. So this is the purchase entry. But I'm going to add the word inventory just so we know that that's what materials means. Skip a space, and then I'm going to credit accounts payable. And again, the author is always going to use on account, right, for all purchases. If we go back to our template, AP is what we paid our vendors, correct? So AP is always the leftmost box. So in this case, I'm looking at the $1,035,000. That's what I actually paid for my purchases. Hence the word vendors here, right? $1,035,000 should be our credit entry. And actually, I'm going to run out of room here. I'm going to have to move this over slightly. Now, what did I put into materials? This has to be a standard amount. And then hence, that's why we again have to close at the end of the year or end of the period. So that's box number 2. So if I go back to box number 2, what am I putting into my inventory account? I'm putting the $1,150,000 in there. So that's my debit. Box 2 is my debit. $1,150,000. How do I balance the equation?
Need credit.
I need a credit. So the new account name for Chapter 10 is called Material Price Variance. And that was $115,000. So a possible question would be, when I record a favorable variance, is it a debit or a credit?
Credit.
Credits. Favorable variances are credits when I record them. So if I'm going to close a favorable price variance, close means what? Get it back to 0. I must have to debit it, right? So when I record it, a favorable is credited. When I close a favorable, I debit it. The second entry then is the usage entry. So here, my credit will be materials. What's my debit? What does the book say my debit is? For the usage entry.
Work in process.
Work in process. With inventory. So these are materials, right, that are used in the production cycle. So that will be the debit. Now, what was my variance direction for the usage?
Unfavorable.
Unfavorable, so guess what?
Debit.
Debits. So you're going to debit material usage variance. So let's put our numbers in. Box 4, 1,104 is what we put into WIP. So this is my WIP number. The farthest one to the right is my WIP number. 1,104. My usage variance was how much?
46,000.
46. And then I took out of my raw material the same amount that I put into it, 1,150,000. And that's it. We're just going to record the purchase, record the usage of the material inventory. All right. Any questions so far? Catherine, Jade, how you doing? Thank you, Jade. Thanks, Catherine. All right. Let's do labor quick. Go back to problem 45. Left to right again. So actual on the left, Our standard is on the right. What's our actual hourly rate?
1250.
$12.50. Actual hours,
78,200.
78.2. And actually, there's 2 yellow boxes, right? So I can actually put that number in twice. What's my SR? Well, we might as well put that in yet.
The number you accounted for, the $12 an hour.
Yeah, the 12 is the standard, right? 12. Does everybody see where that is? Standard hourly rate. What's the 9 again on that standard section? That's per unit. Very good, Teresa. Excellent. Yes. So I don't want per unit numbers here. I want hourly numbers here. All right, we can multiply those out. Do you have the first one?
977,500.
Do you have the second one?
938.4.
Kershaw. For the rate variance, is it favorable or unfavorable?
Unfavorable,
How come?
because on the left is more.
The actual rate.
The actual is more than.
Yeah, the actual rate is more than what we thought. So, yes, Kershaw's right. It certainly is an unfavorable rate variance. So now we're in dealing with labor. The heading changes from price variance to rate variance. What is the difference? I think it's
39,100.
All right, now we'll go to the SH number. Again, I would get in the habit of writing down actual production. Was it 92,000 belts?
Mhm.
Wouldn't it be cool in Excel to actually have a cell reference to a cell that had the actual production in it? Yes, that would be so cool. Times what though? Not the 9. How long does it take to make one belt?
0.75.
That's 0.75. Does everybody agree? Takes that long to make one belt. 3/4 of an hour. So how efficient was the plant?
Not very.
Not very good. I came up with 69,000. Hours allowed for actual production. Now I'm writing this down because there are multiple choice questions in words. It'll say, what does SH mean? And they'll give you a whole bunch of garbage, right? A, B, C. D will say actual, or the allowed hours for actual production. I don't want you to miss that question. Right? What should have it taken to make those 92,000 belts? Well, that times 12 is 828,000. Is my variance favorable or unfavorable?
Unfavorable.
Unfavorable. I spent way too much time. Look at the number difference between AH and SH. Huge, huge problem. Minus 938,400. 110,400. Both same direction. So I got killed on rate. I got killed on efficiency. My production manager is going crazy, right? So that is going to be
149.
149.5, huh?
Yeah.
Unfavorable. And there we have it. Okay. So you're the cost accountant. You're going to go to the production manager and say, look at here, look at here. What happened?
Yeah, what went wrong?
What went wrong? How does this happen?
People got raises.
Possibly somebody got a raise. What's more likely the case if you got this issue?
Overtime.
Overtime. So we have an overtime issue here. I hated overtime, right? People don't want to do it, for one, in most cases. Plus, it's more expensive, right? Okay? What's going on here? What causes an inefficient operation?
Machine could have been down.
Yep, yep. Machines down, what else?
Short staff.
Not with these hours, I'm not short-staffed, but what's more likely the case? My staff are what?
Not efficient, right?
Why are they not efficient? Oh, yeah, that's a given. Right? No, they're not what?
Working.
Yeah, I know that.
They're not trained.
Trained, thank you, yes. Not trained enough on the equipment. Right?
So they're not efficient with it.
Not efficient with it, exactly. Don't know how to run the machine properly. Maybe the machines, they slow them down because it's easier, right? I get that a lot. I run it here at this speed because I know I can handle it and it works. Well, it's designed to go up here at this speed, much higher than what you're running it. Yeah, but I can't, I don't want to. Right? So you have that, butting heads kind of thing. What, as cost accountants, do you always have to be aware of, though? You can't go to somebody and start complaining about their performance. What's the first thing they're going to say to you?
How did you come up with those numbers?
Yes. How did you come up with the budget? You're just a pencil geek, right? You've not run that machine yourself. You don't know what it's like. So this standard, right? 3/4 of an hour, is that you as the cost accountant have to be positive that you can attain that, right? That's what's important here. That's what's important. So that's where that ethics comes in again. You have to get input. You can't put a standard on somebody without getting an input from them as to what is a good standard to shoot for. So that's hopefully what this standard costing will get the conversation started, right? Because if I didn't have this standard, we'd just be going along like we always do, right? And our competitors have the standards, and if you don't, they're getting better, cheaper, faster, right? So how much longer do you think you're gonna be around? Not very. There's too much competition in today. It's not like the 50s and 60s where we were the only game in town, in the whole world. We could do whatever we wanted and make a lot of money, right? Well, now we can't do that anymore. And GM found that out quite quickly, didn't they? In the 80s. So, something to think about. Let's take our first break. Got on my soapbox a little bit there. We'll come back and we'll start again. I forgot one other reason that we could have this strong, inefficient labor force. And I added it at the end here. In a lot of cases, some things are out of the production's control, and one is material quality. So, for instance, if we gave them poor material to work on, well, maybe they tried to use it, it took longer to use, or it didn't work out and they had to start all over. So that could be a final or another reason why we had these huge, large variances here. So what I'd like to do now is make the journal entry for this particular wage or labor cost. And again, let's pop to 553. It's at the bottom of page 553 and the top of page 554. So let's make the journal entry here. I'm going to use the same worksheet. I'll put the page number down for reference, 554. So here again, we're talking about direct labor wages that we paid our workforce. Our debit will be to work in process inventory. And skip 2 lines, because that'll be for our 2 variances. And then we're going to have wages payable is our credit. For our WIP entry, where on our template is our WIP entry? What did we do in materials? Our WIP entry is right over here. So our labor WIP entry is the same location. It's the farthest to the right. So what number do we use for recording our work in process? It's always the farthest to the right. It is always at standard. So this could be another multiple choice question. What number goes into WIP? Actual cost or standard cost? Standard, right? So be watching for that. So I'm going to debit WIP for $828,000. And then what am I going to credit wages payable for? Well, it's my actual number. Actual hours times actual rate. That's what I paid my employees. That's what they're expecting to see on their paychecks. So $977,500 is my credit. So I'm going to put those 2 numbers in. 828 and 977.5 is my credit. So my 2 variances, one was labor rate, one was labor efficiency. They're both unfavorable, so they are recorded as what? Debits. So labor rate variance and labor efficiency variance are both debits. forgot their amounts. Michelle, what were they?
39,100 for the rates and 110,400 for the,
And again, hopefully the debits have to equal the credits, right? So if we add up all three, we should get up to that 977.5. So that's the entry that we need to record labor. Like I said, on the multiple choice questions, not only could I use words, but I could do this. I'll put this in green. Right? And then I could do this. Oh, sorry, this is SH. Ooh. I could use letters to designate the debits and credits rather than putting the amounts in. So in this case, what's going in into WIP inventory? Standard hours times standard rates, right? How do I compute my labor rate variance? It's actual rate minus standard rate times actual hours. And how do I compute my efficiency variance? It's standard hours minus actual hours times the standard rate. So many ways, again, to present the same information. If you need help, the templates should help us, right? You'll have those same letters, AP, AH, SR, SH, right on your templates. So use your templates to know how to use the letters. How to use the letters here. Watch for that. We'll practice some of those as we get along here. I don't want you to lose points on those multiple choice questions. Okay, now the chapter then goes into who is responsible. So I'm going to try to find this here. This is on page 528. The purchasing department, purchasing is responsible for the direct material. Doesn't that make sense? But just the price variance. The price variance. So purchasing is responsible for the direct material price variance. If we look at labor, the personnel department, because they do the hiring, is responsible for the direct labor rate variance. And then the quantity and efficiency variances for both labor and material is the responsibility of the production department. So I think those are pretty self-explanatory. I think it aligns well. And the reason they're doing this is, again, for these reports, we want to report to the correct person, right? And that's the goal here, to improve our operations or improve our purchasing or improve our personnel department's hiring process. So that's the goal with these reports then, is to help with that analysis, basically. So there will be some multiple choice questions on responsibility associated with these variance computations. Also on page 528 and 529, it goes into how do we compute the price variance. And just, again, price or rate variance, understand what these letters mean, right? So I'm comparing the actual price to the standard price. That difference then is my variance times the actual quantity used. Actual quantity purchased, actual hours used, right? So know those letter designations. And then they have the other one, the usage or efficiency variance. Now we're looking at the actual used compared to the allowed amount. And that's what SQ means. It's the allowed amount for the actual production. That's the goal with this, is that comparison. So that's on page 529. Now, there is a discussion on the analysis part of it. And I'd like to talk about this favorable, unfavorable. Page 529 again. Here's what I want to note. The words favorable and unfavorable are not equivalent to good or bad. Just because we call something unfavorable doesn't mean it's bad. And just because it's favorable doesn't mean it's good for our operation. So let's say I had a favorable efficiency variance. What this author is saying is that this is not always good. If I'm a production manager, how can I make something or take less time to do something? What's one way to do it? How can I make this a very large, favorable efficiency variance? I'm in production. How can I reduce the time to make something?
Have more than one person
Mm,
on
I still have 2 people doing time on it. Well, I think one way I could skip some steps, could I not? Which is not ethical, right? Especially when one of the steps is quality control, right? Checking the parts, taking the time to do that. You could do that. Or I can actually not record, right? How many times have I gone out in the shop? Oh, I forgot to write that down, right? I actually didn't work on that job, or whatever the case. So that is a problem, because we certainly don't want to skip operations to get something done sooner, because again, that might lead to poor quality in the end. So that's an example of where a favorable variance is not always a good thing. And unfavorable and again, I'm going to pick on efficiency, is not always bad. How can that be? An unfavorable efficiency variance is not always bad. And again, the budget number not set right, right? Maybe we forgot an operation. Maybe we didn't consider the quality checks. Something maybe not right, right? Or here again, maybe this is not the problem. Maybe my material is bad or difficult to work with. I bought some steel from Russia once. Lots of rust on it. Do you think my production department was happy? No, it took me tons more time to make something. So, and it actually messed up our laser equipment because they couldn't go through rust. So that was a bad decision, which again caused more time to be incurred, but the reason it was more time is that we were using junk material. So we certainly don't want to do that again for that quality piece associated with it. So that's again a little bit to discuss when we're looking at these variance computations really. I'm going to skip the investigation part till Monday. So what I'd like to do is continue with our templates just to get a little more used to it. I do want to touch on our project problem too before we leave today. So on page 570, let's look at our next problem, 48. This problem is written out kind of piecemeal again, and this will help us again try to find those things that might be give us problems on the test. So here we're doing an apple juice sold in gallons. There's 128 ounces in a gallon. They set the standard for 1 gallon, 5 cents for materials, $6.40 per gallon. So we're only looking at material in this particular problem. So, reading A, B, and C, what can we fill out here? What numbers can we fill in here? Page 570. Back already,
Speedy Gonzalez.
I guess. We're just starting another template, Diane. How did it go, all right?
Good.
Oh, good.
What is that?
They
Oh,
make, some kind of cleaning toilet or something.
Oh, really?
Yeah.
I think they're on the east side, aren't they?
My husband used to work there
Oh, did he? Sure.
many years.
Yeah, I know we've had quite a few of our students get hired there.
I know a lot of people that work there.
Yeah.
oh, really, big companies, you know?
Big industries?
Huh?
Yeah.
You know, a lot of people in the industries.
Yeah.
I don't know, really. I just know it's not a free business.
Mhm.
Mark.
Okay, anybody can help me with the numbers here?
Office materials purchased,
Actual quantity purchased
yeah,
is what?
2,650,000.
Do we have to worry about any inventories, Teresa?
No beginning or ending inventories of raw materials.
Okay, so that means then our quantity used is the same number. Perfect. Okay. What else do we know?
Isn't actual price per unit like 4.5 cents?
Yep, 4.5 cents. And I would actually say not unit, it would be what? Per
ounce.
per ounce. Yep. 0.45, 4.5 cents. So I can multiply that out. What's the SP though?
$0.05.
5 cents, right? Does everybody see where the 5 cents is coming in? How come I didn't use the 640? That's also a standard.
That's 5 cents multiplied by 128 ounces.
Correct. So what is the 640 then? Per unit. Very good, Teresa. Yep. So remember on this chart, we don't care about the per unit number, we care about the actual unit, in this case ounces. So that 5 cents is repeated in 3 locations. All right. Should we try our SQ number? How do we get that? What are we going to multiply? What are we going to look for to get that number? SQ.
The input allowed.
It's the allowed?
Yeah.
Oh,
For
yeah,
the actual.
production. So we got to look for actual production, which was how much? 20,000 gallons, right? 2,000 gallons. So what do I multiply that by? How many ounces in a gallon? 128. Yeah, 64 and a half gallons, 128 ounces. But my SQ has to be in ounces as well, right? And multiply by a price per ounce, I gotta have my SQ in the same unit measurement. So 20,000 times 128, 2,560,000. Is my allowed quantity. So I multiply that times the 5 cents, 128,000. And these are dollars, right? These are dollar amounts here. So looking at my price variance, is it favorable or unfavorable?
It's favorable.
It's favorable, right? And what two boxes do I look at?
119.
Well, I can, but if I look at my price and my price, right, that tells me too that it's favorable. My actual price was lower than my standard price. How about my usage variance?
Not favorable.
Unfavorable, yeah. So I'm looking at the actual quantity used and I'm comparing it to the allowed quantity, right? So in this case, my actual used was more than my allowed quantity, so that's unfavorable. So now we can just make the difference. 4,500 for the usage variance. For the price variance, I'm looking at 13,250. And total variance is how much? 8,750, because I can net the two. Which direction? Favorable, right? Now, who is responsible for the price variance? Purchasing. Who is responsible for the usage variance? Production. Production responsible. Very good. So, going back to our discussion, is this favorable variance good? Is the favorable variance good?
You came back out behind you. Oh, I was looking for you. I thought you. Then I figured you probably came back, so me and Austin came back.
Awesome. What do you think?
I think it went well.
Good. Awesome. Good for you. Tom, you thought it was all right?
Yeah, it went all right.
It was a good experience.
Yeah.
I don't think anybody was really looking for accountants.
Really?
Brand Uzis.
I
Yeah.
did not talk to Handusies.
Oh, really?
Yeah. They're looking for someone in bookkeeping.
Good.
Basically, doing it all.
Really?
Well, like one person doing it all, or?
They have a bookkeeper, but. they
That's
need
pretty much it,
one
yeah.
more.
They have one bookkeeper and they have like the HR person does the payroll for right now. That's about it.
Wow.
Yeah, so that'd be a good opportunity.
Yeah, there you go. Good. Awesome. Yeah, it's always something, like when I applied here, I just applied on a whim too, and it turned out. So you never know, you never know. Where was I?
Not sure.
You were asking if that was a
Oh, yes.
good
It was good.
outcome.
Yeah. Is that good?
Yes.
Yes, it is. But in the back, we're always kind of pessimistic, right? The accountants are. So what do you always have to think about when you got a good price?
What did I do wrong in my calculation? Or,
Well, I would be concerned about the quality, right? There's a reason why you get a cheaper price on something, usually.
yeah.
Maybe there was something that, maybe we had a lot of, what are we making, oranges here? Orange juice?
Yeah.
Apple juice. Maybe we had a good bumper crop of apples and the price went down than what we thought. But again, even though it's favorable, I'd be a little concerned about the quality. Maybe it's watered down, could be, right? What about this? Is this always bad?
Not necessarily, because we're not that off.
We're not that far off, it's
Yeah.
not too bad, right? It is unfavorable, so what do you think happened? I'm making apple juice gallons.
I'm gonna have 2 bad apples.
Bad quality, right? The quality was bad, so maybe I had to redo something, right? Or use more, correct? Or I might have opened the valve on something that I shouldn't have, and it went on the floor. It happens, spills, loss, waste.
Accident, yeah.
What else is also a concern with, let's just say this is cheese, Liz. You're the cheese guru. What do we always have to be concerned about cheese? People doing what? Stealing it, right? That's a problem.
We do eat it, so it's
If you eat it, it's okay.
okay.
But yeah.
Just walk in the backpack and just
Oh.
walk by and grab one, pretty well, walking over.
But that also could be influence quantity usages, right? Stealing. So we always have to be concerned about that. Like I said, this is a pretty good standard. A gallon is a gallon, so it's not like, oh, one more thing that could be happening. Evaporation. Right? We gotta cook it. So we probably use some of our apple juice due to evaporation. So just some things to think about. So setting the standard might be an issue. I might have to actually use 129 ounces to account for the 1 ounce I'm losing to evaporation. So setting the standards is not just on the surface very easy to set. So something to be careful for. All right. Now, question 2. Question 2, how about question 3? So we figured out questions 1, price variance, and we figured out question 2's usage variance. I need another template, guys. So grab another template here. What I'm going to do is I'm going to clone this one. These templates are nice to go backwards. So here's what I mean by backwards. In the second week, the material usage variance was 4,000 unfavorable. This is question 3 now. And the price variance is 20,000 unfavorable. this could be something that you'll see on your test. You gotta make it a little tougher. This is too easy to do what we're doing. So I'm gonna ask to go backwards into the upper numbers. Obviously, together they're 24,000, right? They're in the same direction. Not that that really helps us. Polly, are you with us now? Do you know what problem we're on? We're at problem 548. You got to the good part, the fun one. All right, what other number did they give us in problem 3?
2 million ounces.
2 million ounces were purchased and used. So I can put that in. Okay. What other number do we know that we can put in our template?
The 5 cents.
The 5 cents, right? 5 cents is what? The standard price. Does everybody see where that 5 cents is coming from? So we can put that number back in that we had before. So 5 cents times 2 million is 100,000, right? So my dollar amount here is 100,000. My dollar amount here is 100,000. Okay, now what can I do?
Figure out the difference.
I can solve this box now, right?
Yep.
Which is what?
120.
What could be another answer other than 120? Could be 80.
80.
But that would be okay.
Yeah, that's what I meant.
Whoa, slow down. Which one do you?
80.
Not 80.
No, the 120.
Yeah.
Stop confusing me.
I'm just making sure that you don't get excited, right? Because it's unfavorable. It'd be 80 if it what? If it was favorable, yes. So this is some twist that you'll see on the test too. So, Liz, your really cool template won't work for these problems. Well, we're going backwards. Or anybody that's creating the Excel. So we still have to understand the relationship between these two boxes, right? And just plug the number in. All right, going over to this side, what's the number here? It's either 96 or 104.
96.
Good. Right? Everybody agree? It's a consensus. We're doing consensus construction today. 96,000. That is correct, right? So what must my SQ be then? We have divide, right?
Yep.
1,920,000. But these are what, ounces? What does the problem want us to figure out?
How many gallons?
Were actually produced. So they want my actual production here. So that's the question. I know I multiply something times 128 and I should get 1,920,000. So what do I do to get my gallons?
Divide.
I gotta divide again.
And you get 15,000.
15,000 gallons. Now, I don't know about you guys, but that was fun. that was totally awesome. So, little twist, going backwards, getting our variances to help us figure out what the number of gallons were. And then finally, what was the actual price? Here's our other question.
6 cents.
6 cents. Simply taking the 120 divided by the 2 million. Right? Give us our 6 cents. So that was the second question. Okay,
That was fun.
that was fun. Woo! I gotta end on that good note. You always want to leave the stage on a high point. This is it. I didn't get a chance to talk about the project, but we can certainly do that on Monday. Great job on those that were working on their Excel worksheets. It looks awesome. For those that want to try it, please do so. I think it's a great chance to use Excel here. Have a great and safe weekend, and don't get stuck in the snow tomorrow. Jade, Catherine,